Hi guys, I hope all of you are doing well. Welcome back to Your Nifty Guy. In today's video, we'll be breaking down Nifty 50 with a clean, practical approach, with focus on key levels, market structure, and what I'll be watching not just for Monday, but for the entire coming week. No predictions, just preparations. If you find these breakdowns useful, it really helps when you hit the like button. Subscribe to the channel so you don't miss out the daily updates, and feel free to drop a comment with your thoughts or setups. I would love to hear how you are planning your trades. And on that thought and note, let's just get straight into the charts. And as usual, the format will be the same. First, we'll be analyzing what we had planned for today versus what happened in the markets. How did we tackle those particular entries or our trades? And then we will be shifting our focus to the plan for the coming next trading session. Today, what we had planned was there was a clear thought that this will be a no trading zone, and if we are closing down below this with a pullback, we can look at shorting because this was a important level. And as you can see, we went down. This was the pullback that we needed. It was a very good inside bar, and then the swing went up above the inside bar. This was the entry right at 940 with SL right above here. Markets obviously will not be moving in a straight line. They gave a small, very small pullback and then again continued. Once this swing was broken, I shifted my stop loss from here till here. Now, I actually got out. I'll first tell you the exit. I got out in this particular green candle of 11 a.m. This was a pretty long trade for me. I usually do not hold my trades for such a long time, but again, we were breaking out of a major zone, so that was the reason I held on to the trade. And the reason for exit around here was RSI divergence. Now, the RSI divergence started forming around this level, around the 1030 level, but then it was not a confirmed, but an open-ended divergence. That was the reason I still held on to the trade. But around here, once the divergence got confirmed with this particular green candle closing, is where I exited this particular short trade. Now, this was the first and simple trade, which, as per our plan, everything fit right like a glove. And I hope you would have traded this particular setup. It gave very good rewards with a very small stop loss. You can see the stop loss around was here. And in case if I'll just measure my entry, short position. So if we entered around here, this was the initial stop loss and this was the exit. So it was almost a 1:2.5 RR trade. So these are the trades that you cannot afford to miss. And this is the exact reason why we plan our trades one day in advance so that once the scenario is happening in front of us, we know exactly how to react. Markets opened with a gap up, could not sustain, immediately went into a big red selling candle. But we cannot obviously sell around here. We need for our pullback to be there. Otherwise, what all these are support zones. So as I also mentioned that we can look for any buying opportunity in this particular green zone. And markets could have very well formed a double bottom or went into sideways zone around here or immediately reversed as well, right? So that was also a second plan that we had, that if we close down below this and then we reverse and go up above this, we can create a long entry. So we need to wait for the pullback to come, and then that pullbacks, the last swing low to be taken out is where the entry should have been triggered for us. And anybody who would has watched this particular video, if you have taken this trade, please let me know in the comments box. Now, the second trade of the day came for me around here, which I got out in minor loss. Now, why I say minor loss is because I obviously entered keeping in mind the entire uh, biasness towards the daily on the daily analysis that we did. I already said that right now my bias is on the negative side. And if we are looking at creating a long position, obviously, if our setup is permitting something, we have to take that trade because that is what trading is all about, carefully planning your trades and then executing them. So around here, if you see, this was the last swing which was created. And once this high was taken out, this was a double bottom. Uh, I'll just quickly draw it for people who are not able to see it. This was a clear double bottom breakout which was coming in, and paired with the RSI divergence which was there, it could very well have formed a base around here and could have continued upwards. This was any which was a scalp for me, and once I take any trade which is opposite to the main trend, I traded it with smaller quantities, and I'm very quick to take my stop losses. It did go well, right? It did give a very good profits around here, but then ultimately it came down, and I took a very small loss. If we speak about in point term, it was not even one premium point, less than something in points. So absolutely fine compared to what I had just captured. This was nothing. Uh, and then again, I waited for the entire day for any good setup to form. But then again, markets were volatile. You can see this VIX which had formed in the markets. Then once again, when market decisively broke and gave us a closing above this, this is all simple trap which is going on. Markets immediately came down. Uh, Again, went below this particular uh, small swing which was created. The swing is not very well visible on the spot chart, but if you would observe the same swing or the same time period swing on the premium charts, you will be very well be seeing this particular swing. And markets did go back below this, but immediately reversed as well up. So for me, I closed my day after this particular trade. There were no further trades which were taken. Now, today's video might be a little longer because we will be analyzing a top-down approach that we do. We'll be starting with the weekly analysis and then we'll be moving forward to the smaller time frames and we'll create the plan. First, I'd like to come down on the daily time frame. I'll be deleting these lines which we drew for today's trade planning. Now, this daily fib resistance which was there, this is no longer valid for us. The reason being, uh, market has already formed a new swing low, right? Even if market turns around from here, so this was the entire fall of which this was the 0.5 to 0.618 zone. Markets did retrace, did not even go up to this particular, so this was not even tapped and went down from here. So this is the reason why we'll be no longer needing this particular zone. Now, on a weekly time frame, we have been creating negative candles for 2 weeks straight. Why I call 2 weeks? Because for my analysis of price action, any candle, be it weekly, be it daily, be it 5 minutes, be it 15 minutes, on any time frame, a candle to be negative, the high has to be lower than the previous high, the low has to be lower than previous low, and the closing has to be below previous low, right? So this was the first candle the last week which had formed below. The high was lower than this particular high, the low was lower than this particular low, closing also was below this particular low. Similar is this candle. The high is lower than this, the low is lower than this, and the closing is also well much below this. So these are 2 consecutive weeks of, if you see in terms of red, obviously these are three red negative candles, but in terms of uh, candle only on a candle basis, these are two negative candles that I look at. Now, if we are to look at this particular sideways consolidation that we were in for almost 1, 2, 3, 4, 5, 6 weeks, and then ultimately broke out, and now we are back again in the range. So does it mean that this is a breakout failure? Time will tell. We will not be predicting anything. We will simply be planning and we'll be sticking to our plans, right? So on a weekly time frame, yes, our key takeaway from this thing is, yeah, Nifty is looking weak, but we are still above. So this is not just the daily fib support which is written over here from 13th June low, because the 13th June low is also this particular low. So this holds, this is a daily as well as a weekly zero point 0.5 to 0.618 support zone. So we are still above that. We have not got a closing below this. Now, coming down on the daily time frame. So yeah, I'll quickly draw the structure in case if people are not able to. We were sideways in this particular zone, but we created a, if we are simply to look at the swings. So around here, we created a lower high, a lower low, another lower high, and we have also created a lower low. So the structure on daily is clearly bearish. And if as I said, if we are to look at it, we got a breakdown of this double top on daily around the 25,335 levels. And on a shorter time frame also, again, there was a on 75 minutes, which I had mentioned in one of the previous videos that this would be a key level to watch out for. This was the level, and I believe it is the same level at 335. And we have actually broken down below that and formed a double top around here as well. So things are not looking pretty great, but we have to also look at all the other aspects and not just on the 5 and 15, the RSI divergence that I had spoken about in the today's trade analysis. The RSI divergence is not just on the 5 or 15 minutes. If we look at higher time frames, the 75 minutes time frame, and if we compare this low to this low. The RSI here was lower, the RSI here is higher. There's a clear positive divergence on a 4 hours time frame, almost flat. I'll not call this any positive divergence, but yeah, in case if it turns up, and on a hourly time frame also, again the same scenario is there. So right now we need to be extremely careful. Now we can get done with this level because this level is already been breached, so we'll be removing this, but we'll be keeping this level. So this is the 0.5 to 0.618 of the daily from the 13th of July low, as well as on a weekly time frame from the last swing till the very high. This is the level. So in case if the structure has to remain intact and we have to reverse from here, we'll be keeping this particular level as a level of importance on our charts right now. If we speak about Monday, coming week, again we have to tread with caution. Number one, we have got two trending days, right? Number one, number two. Usually what happens is, why am I saying usually is because it is not necessary that what has happened in the past will definitely be repeating itself. But this is what usually happens is after good 1 or 2 trending days, we have a sideways price action. So we might be around here, maybe breaching it by a little bit and then again continuing around here, but we can experience a couple of sideways days. So number one suggestion would be, at least for Monday, let the price action again form for Monday and then we'll decide for later on. But at least for Monday, keep the trading activity low. Trade with very low quantities if you have to. Otherwise, try to observe what is happening around this key price action level, right? And on a 75 minutes time frame, say for example, markets have to reverse from this particular level. This is a positive divergence and this is getting confirmed. So this level, which is today's low, will hold a lot of importance for us, which is, again, I'm not marking it on the chart because this is almost the low of this particular, the 0.618 level that is already there on our chart. So this is also a low. So yes, below this, we are short. And there will be another scenario in which I will be taking again a bet on the long side with very small quantities, is if this low is not breached, or if this low is breached slightly. So this is the fall which has come. This is the high which is made here. If we form either this, okay, I'll be deleting this. Sorry for the confusion. And 1 second. I'll also be deleting this. I'll be drawing this again. But for the time being, for the sake of making you understand this particular trade, in case if this divergence has to play out, right? In case if this low is not taken out and then this high gets taken out, I will be planning a long trade with small quantities, of course, but this is keeping in mind I follow RSI very strictly. So this is a setup that I follow, and in case of a higher time frame, obviously it adds much more value. On a 75 minutes, on an hourly, as well as the smaller time frames, is showing some divergence. So maybe we get a reversal from here. Maybe. If we get it, we'll trade it. If not, we'll ignore it. We prepare for every scenario. So in case who is new here, in case somebody is old and following me since a long time, there are multiple trade setups that are marked on my chart, and that is because we plan for all the scenarios that can take place, and based on what act is being played out by Nifty in the live markets, we can act accordingly and we can take advantage of that, right? It gives us an edge in the way that we are mentally prepared for various scenarios, and that is something we do not let the markets take us by surprise, but we do a deep homework and we look at all the possible scenarios and mix and match the permutations and combinations, and we plan for it. So this is one simple setup, which is that I will be looking at a long entry. In case this is a equal bottom, I will be planning a long entry still. In case it breaches this particular swing low slightly, okay? But I mean slightly, not by a major margin. A slight breach below this particular low, and then this high gets taken out. Obviously, I will be going long here because this is a liquidity sweep which will be happening around here. And in case if this low gets breached and this high is not taken out, that means we are getting a pullback, and then again we are going down below. Obviously, that's the short trade that we have, right? So for now, again, I'll be drawing this again. Yeah, we'll be doing all the analysis on 15 minutes. So this is the first simple plan of trade, which I had been discussing since A lot of my last videos, since the time this zone is here, I have always been mentioning that below this zone, we are obviously short, right? Because this is like breaching a key level on the daily as well as weekly time frame. So below this level with a pullback, we are definitely short. This can give a good trade. Quantity will not be quantity will be regular, right? It will not be in the lower quantities in the this particular trade. Say, for example, we open flat or a minor gap down, we go down below this, we get a pullback, the low gets taken out, right? All these conditions should be fulfilled for us to enter into this trade. And like I said, around here, this will be the long trade that I will be planning. I have already discussed the multiple scenarios which can take place around here. So once this high gets taken out, this will be the entry trigger for the trade on the higher side. Uh, Subject to all the conditions that we have just discussed being fulfilled, right? Now, again, let's just switch to a higher time frame, and I will again be, because we have a new swing, I'll be using the daily time frame. I believe that will be giving us a very good, say, for now, for today, till no new low is formed, right? This is the zone of importance for us. As always, we plan a lot of trades using Fibonacci. I am also planning to make a video on it pretty soon. Okay, did I delete the level as well? I'm sorry, guys. 1 second. Ah, no, it's around, it's here. Okay, I just need to extend it. Perfect. Say, for example, we open with a gap up, we are traveling ahead or we're traveling up on a long side. If I am entering longs around here, this is the region around which I will be definitely be looking at booking my longs at first, depending on the price action. And this is the same level around which we should look for a short entry in case price action gives us some confirmations around here, say for example a double top or maybe a sideways consolidation for some time, and then we get a down move. And yes, needless to say, above this level we will be long. So this will be the simple and precise plan of action for Monday, but I am assuming there will be some sideways price action considering we have got two good trending days. So the sideways price action actually after today's low was made as well. You can see that these are the signs of a sideways price action wherein the highs are being broken, immediately being sold into, the lows are being broken, immediately being bought into, and this is what happens in sideways where a lot of people are getting trapped. So this is the reason why I am suggesting you guys to tread lightly for at least Monday, and then Monday evening we'll again be discussing and creating a plan for the next day. So I believe and I hope I have been able to add some value to you guys with this particular analysis as well as the trade breakdown. One more quick thing which I will just quickly be discussing here is, so if you look closely here, we got a head and shoulder pattern. Let's just see if we have actually, yeah, by visually also I can say we have actually uh, reached the target for the head and shoulders is around 150 odd points. So from the breakdown points, we have actually got 180. So we have got the target of the head and shoulder breakdown as well. So there is, let's see how the market reacts on Monday. And Reliance has just discussed the results have been announced, the quarterly results, and Reliance being a heavyweight, the direction in which Reliance moves would be a significant mover of Nifty on Monday. Let's just wait and watch. And yeah, definitely, we are already ready with a plan of action for all the scenarios which can play out. And we will be taking a trade based on that. So, in case if this video has been will is useful to you guys or you find it useful, do not forget to smash the like button, subscribe if you have not already subscribed to the channel, as well as put down anything that you have to say in the comments box. I read all the comments and I make sure to reply to each one of them as well. So, yeah, that's it from my side for today. Have a happy weekend, guys, and I'll see you guys again on Monday post the market. This is your Nifty Guy signing off for today. Cheers. Thank you so much for watching.